Let's talk about digital cash stuffing, how to do it. We're looking at the cash stuffing guide. It's in my bio if you want to grab it. So this is what regular cash stuffing looks like, right? You take your variable expenses and you create envelopes for them. And when you're paid, you go get cash, you bring it home, you stuff it into the different envelopes, and then you use these things for your expenses throughout the month. A huge benefit of cash stuffing is that it really helps you with your overspending or impulse spending because you see the money physically and you don't want to see it leave. It makes you think twice about your purchases. And this is where I started, but now I do digital cash stuffing because I don't have good access to banks. And there's a few different reasons why you might want to do digital cash stuffing. Number one, if you don't have a bank close to you and it's a pain in the butt to drive to the bank, that's one reason. Two, some people are scared of cash stuffing. They're scared that the money is going to get lost or stolen. But also, it might just be more convenient for you to have all your money digitally instead of in cash. I would recommend you do it in cash at least for a month or two to just get a feel of how your money is moving. But here's how you will do it digitally if you wanted to. So it's basically the same exact concept as cash stuffing. So you would still do your budget the same. It would just look a little bit different because you're not using envelopes. Instead, you're using bank accounts. So here's what it might look like. And you can structure this however best works for you. This is just an example. So on your payday, you would send your fixed expenses, meaning your bills, to a bill checking account. Okay, those stay digital. Then you would send your variable expenses, in this case it's $500, to different checking accounts. That way you have debit cards for them and you can use them as needed. So in this example, we have a checking account for groceries, one for gas, and one for fun money. You could also have one account with buckets. Some banks allow this. I know Ally Bank allows this. You can check into them if you want to, but basically you would have one checking account, and within that checking account, you could designate different sums of money to different buckets so that it's all held within one account, but then when you spend, it comes out of a certain bucket within that account, and you can see how much is left for each category. Then for your sinking funds, these are your longer term savings goals, right? You would send that to your high yield savings account. Within your high yield savings account, you would then have buckets. Again, Ally is really good for this. Some others have buckets as well. That way you can save for your emergency fund, things like vacation, car repairs, all within the same high yield savings account so that you're getting that good interest on your money. Make sure when you're looking for a bank to do this, they allow multiple checking accounts with debit cards and that they do not have fees associated with the accounts or minimums, and also that the bank is FDIC insured. That's very important so that your money is safe. Ally is FDIC insured. Some people think it's not because they look at the investment portion. Investments can't be insured, but their banking products are insured up to $250,000. So yeah, that's the gist of it. If you want to learn how to do this more in detail, like I said, go grab the guide. There are templates in here like teller slips to take to the bank. There are different resources and different templates to help you figure out how much money should go into each fund. Try it out for yourself, draw it out on paper, and see what you think is going to work for you and what you want to do. You got this, friend.